Imagine an entire industry pivoting, not just, tweaking things, but fundamentally shifting its core identity.
That's happening right now.
Exactly. That's precisely what we're seeing in the dynamic world of Indian IT. So today, we're taking a deep dive into this pretty fascinating transformation. And for this particular deep dive, we've pulled together quite a stack of sources.
Hmm.
Everything from detailed financial reports, market analyses, even some academic papers looking at Indian IT trends and its future.
Right, getting the full picture.
Yeah, our mission really is to cut through all the noise. We want to extract the most important nuggets, the key insights, and give you a really clear picture of what's actually driving this massive sector.
What the real story is?
What the real story is, yeah. What challenges it's facing, and maybe where some surprising bright spots are popping up. So you should walk away understanding the key trends and what it all means for the future of tech and global business. Okay, so to really get our arms around this sector,
Hmm.
where are Indian IT firms strategically positioning themselves right now? What's the big shift?
Well, the really fascinating thing here is this fundamental pivot. They're moving away significantly from their traditional core R&D focus
Okay.
and shifting towards an AI-centric strategy. We're talking the majors here, TCS, Infosys, Wipro, HCLTech.
The big names.
The big names. They aren't just like playing with AI on the side. They're strategically reorienting their whole business model towards AI-powered integration and, crucially, high-margin services.
High margin, okay. So less foundational research.
Exactly. Less pure foundational AI research and much more investment in the practical deployment of AI.
Deployment.
Think automation, advanced enterprise applications for businesses, complex AI systems integration for their global clients. That's where the focus is.
Right.
And critically, to make this whole pivot work, you're seeing massive upskilling programs, huge efforts across the entire sector to close those AI and machine learning talent gaps.
That sounds like a massive undertaking. Retooling on an epic scale, really.
It really is.
So that's a profound reorientation. How are these strategic changes, this intense focus on AI, how's it actually translating to their financial performance? Are we seeing the payoff yet?
Well, connecting this to the financials, the revenue and earnings outlook paints kind of a mixed picture, but it's very strategic when you look closer.
Okay.
For the big Tier 1 companies, Infosys, TCS, they're actually expecting fairly moderate growth in Q1 FY26.
Moderate. Why is that?
It seems largely constrained by a slower discretionary tech spend globally. Clients are being a bit cautious.
So broader economic headwinds are still a factor.
Definitely. Even with the AI pivot, they're still vulnerable to that. But this raises an interesting point. Some of the mid-tier firms think Mestec, Sonata, Burlesoft, Emphasis, they're actually showing signs they might outperform the larger guys.
Really? How come?
Well, it often comes down to maybe stronger pipeline visibility in certain niches, or maybe they have more nimble service models.
So they can react faster to these new AI opportunities.
Potentially, yeah. That agility can be a real advantage. But overall, looking at the bigger picture, FY25 IT spending was actually pretty robust. Revenue might have topped $280 billion.
Wow.
Which is a solid, 5.1% increase. And the projection is to hit maybe $300 billion in FY26. So there's underlying strength.
Okay, so it sounds like the sector is navigating some choppy waters, definitely, but also finding these new pathways, especially around AI. But as you said, it can't be all smooth sailing. What are some of the big headwinds or risks the sector's grappling with?
You're absolutely right. There are definite challenges. One major factor is the U.S. macro pressure.
The economy over there.
Yeah, exactly. Heightened recession fears, you see a trend of delayed bookings. Even major players like Accenture have noted this.
Okay.
And that points to a sort of subdued demand environment, right? Clients holding back on those big discretionary IT projects.
Makes sense.
Then you've got significant regulatory risks, U.S. tech and visa policies, especially the ongoing H-1B constraints.
The work visas, always a factor.
Always a factor for skilled foreign workers. And that, coupled with the rise of new offshore models like these global capability centers or GCCs.
GCCs, what are those exactly?
They're basically captive centers, global companies setting up their own IT hubs in India rather than outsourcing to a third party.
So they're bringing some work in-house, essentially, but still offshore.
Pretty much. And that could, pose some long-term threats to the traditional IT service provider model. It might reduce reliance over time.
That is an interesting point about the GCCs. Is this a temporary thing, do you think? Or are we seeing a more fundamental shift in how U.S. companies handle outsourcing?
That's the million-dollar question, isn't it? It feels like a recalibration might be underway.
But it's not all challenges, right? You mentioned bright spots earlier. Where are those balancing things out?
Absolutely. It's definitely not all headwinds. There are real positives offering a counterbalance. HCLTech, for
At
instance.
HCLTech, what about them?
Well, they stand out. They've got a remarkably strong FY26 revenue forecast, something like 2 to 5% growth.
Wow, that is strong compared to the caution elsewhere.
It really defies the more cautious expectations from many of their peers.
So what's the thinking there? What are our sources suggesting about HCLTech's approach? Is it like a super aggressive AI strategy or unique clients or maybe focusing on specific industries that are doing well?
Well, the analysis seems to suggest HCL Tech's resilience comes from a few things. One is their aggressive focus on engineering and R&D services.
Right.
Those tend to be a bit less discretionary, even when budgets tighten. And they also seem to have a strong pipeline in specific AI-driven transformation deals.
So they landed some big contracts.
Looks like it, yeah. Significant contracts providing a bit of a cushion. And then another really big bright spot for the whole sector
Yeah.
is the big push for Indian data centers.
Building out the infrastructure within India itself.
Exactly. And that initiative is directly boosting demand for cloud and AI infrastructure locally, which in turn directly benefits the IT firms involved in cloud integration, edge solutions, basically helping clients use these powerful local computing resources.
So it creates a strong domestic demand engine alongside the global one.
Precisely, it adds another layer of opportunity.
Okay, this next part feels really crucial for understanding the immediate future, the next few quarters. What are the absolute must-watch indicators,
Yeah.
the trend drivers that will really shape this sector?
Right. There are several key things to keep a close eye on. First, the Q1 FY26 earnings, which should be coming out around July, August.
The next earnings season?
Yeah. The commentary from the Tier 1 executives, what they say about U.S. demand, about their remaining performance obligations, or RPOs.
RPOs. Remind me, that's basically booked future revenue.
Exactly. Contracts for services they still need to deliver. It's a great forward-looking indicator. So RPOs and any talk about margin pressure, that will really set the tone.
Okay.
And watch the mid-tier firms' performance then, too. Their results could hint at broader sector strength or weakness because sometimes their agility makes some early indicators.
Got it. Beyond earnings.
Well, AI and cloud momentum is obviously critical. Just the continued adoption of enterprise AI services, hybrid cloud solutions, and that's boosted, like we said, by the local data center expansion. That should keep fueling growth.
Makes sense.
Then U.S. economic sentiment, huge factor.
Huh.
What the U.S. Fed says, jobs data, any real recession talk, that directly influences outsourcing demand. Investment budgets could freeze or flow based on those signals.
Right, the macro picture again.
Always. Regulatory and policy updates, too. Any new visa rules, H-1B changes, broader India-U.S. trade developments. Those can impact near-term outsourcing dynamics pretty quickly.
Okay.
And finally, don't forget, currency tailwinds.
The exchange rate.
Yeah. A weaker rupee significantly helps earnings for these companies because they get paid so much in U.S. dollars. It can be a nice boost to the bottom line.
So quite a few moving parts there. Given all that, the big AI pivot, the headwinds like U.S. macro pressure and GCCs, the bright spots like HCLTech and data centers and these key drivers.
Yeah.
What does it all boil down to for someone maybe interested in the investment outlook? What's the takeaway from the analysis we looked at?
Right. And just to be clear, this is based on the source analysis, not personal financial advice, obviously.
Of course.
But the general thinking seems to be maybe hold the sector leaders like TCS and Infosys. They offer stability, sustained dividend quality.
The blue chips. Yeah.
Exactly. Their size and established client base give them resilience, even if near-term growth might be a bit, tepid.
Okay.
Conversely, the advice seems to be watch those mid-cap firms closely. Emphasis, Sonata, Mastech. They could be outperformers if their earnings surprise on the upside.
Because of that agility we talked about, capturing specific AI niches.
That seems to be the thesis, yes. Their agility might let them grab those high-growth AI opportunities faster. And then HCLTech.
The standout performer.
Yeah, it's sort of emerging as more of a tactical bet. Because of its higher guidance, that strong AI focus, the analysis suggests maybe considering overweight exposure there. Their specific strategy seems to be paying off right now. So overall, Indian IT firms are clearly in a major transition. They're evolving, aren't they? Beyond just traditional services, really becoming core AI and cloud integrators.
That's a big story.
That's the big story. And that pivot positions them, generally, for moderate, stable growth in FY26. Now, there are strong tailwinds. Automation demand is huge. Currency benefits help. That digital infrastructure push in India is real. So the sector should remain resilient. But those near-term headwinds we discussed, U.S. macro pressures, policy uncertainty, slower discretionary spend, they could definitely cap the upside potential. So it leads to this cautiously optimistic sector outlook, maybe favoring those nimble mid-tier stocks and select leaders like HCLTech that are showing clear differentiation.
Cautiously optimistic. It really does sound like a complex ecosystem, doesn't it?
Yeah.
Balancing this huge AI ambition with, global economic reality must be quite the tightrope walk.
Absolutely. It's a delicate balance.
So here's something to think about. As the world leans more and more on AI and digital transformation, what shifts might we see next in how global tech services are delivered and consumed? And maybe more personally, how might that impact your work or your business? It's worth considering that interplay between global forces and these big tech shifts.